Good morning. This is my market review for Friday. Now, we're going to do things a little bit differently here. We're going to do an equities trading review for the activity that I did on Twitch. So, without further ado, let's get into this so we can do some market structure and then we can get out of here. We can do the stream where we do our prognostication, and yeah, that'll be a wrap. That will be a wrap for the day. So, taking a look at this, we were aiming for these lows, or at least I was aiming for these lows. I was expecting this to come down here, tag them, and then move higher. They didn't do that, so I took it short, okay? So here I was fiddling with the position, doing a whole lot of activity that honestly I had no business doing. Using my own personal risk profile, if the market were to grind me out maybe once or twice, I wouldn't want it. It's just not economical. It's still pretty high probability. Everything at that time was stacked towards taking out these lows, but it really wasn't worth it because this can happen, especially during London. It can just wander against you. So during the day, we finally took out those lows, and if we'll look on the hourly chart, we have an order block. Yeah. So on the hourly chart, we have this order block, right? What I saw, what was going on was I was seeing price kind of peak up and then dig down into the order block, and it was showing some very bullish signs. We were expecting very bullish things to happen out of this marketplace. Saw it come back down, produce this fair value gap, bought it, right? Took it off here. Now, why did I take it off here? It's because this was during lunchtime, basically. So during lunchtime, if you're going to have a trend continuation or you're going to have some kind of retracement or something like that, basically trending behavior, it's going to continuously move in your favor. It's going to be kind of like this. There will be wicks. They'll be very, very ugly. They'll be disgusting, but they won't diddle. They won't hang around in place. They'll actually produce some movement in your direction. So once I saw this start to diddle, I took off the trade, and that was it. Then I was very interested in taking the short. Now, why did I take the short? Because I saw that this order block was wide open. We hadn't capitalized it yet, and we were we were in a retracement time. So once we rejected this, we started rolling over, doing the other side of the market. I believe I shorted this in the S&P. Did I short this in the SP? Yes, I did. I shorted that in the S&P. And in here, once I started seeing evidence mount of kind of a fast market, I saw this, or I saw this impulse, and then I saw it kind of take it back, and I was like, I don't want to be a part of that. So then it diddled. But once it broke, given the time of day, given what was going on, I was very interested in that, especially since we hadn't kissed his order block recently. Well, we hadn't properly capitalized that order block. So I really wanted to see that happen. I took it short. I took it short again, and then I took the trade off. Why? Well, like I said, this was a lunchtime. So if it starts, if it gives you these little like micro retracements, these OTEs and all these things, and then it doesn't run off of them during lunchtime, you're probably not going to have a good time. You're not in a good trade. So take those off. Yeah. So that's what I did. I took those off. Let's go back to the 15-minute. June. Tuesday, CPI. Okay. So CPI, like I said, what was the plan? The plan was to take these lows, right? Now, what is special about CPI? This news release, it basically goes session to session. Now, what does that mean? That means we have our pre-market session. Our pre-market session runs up. Okay, now our pre-market session did what it was going to do. Now we watch RTH. We want to see that RTH rolls over. We see RTH pump up, okay? Once RTH starts pumping up, it's basically locked in that RTH is going to be pumping up, right? So we can either sit back and watch this pump, or we can lower our risk. We're gonna find out. You guys are gonna see in the when I go over the S&P. Basically, I went to a lower risk asset, and I tried to follow this pump. Not really very successfully because I wasn't committed to it. I was committed to this rollover, which of course happens when we start lunch-ish. Where are you? But then once that happens, I'm sorry, if the rollover still doesn't happen um, through the RTH morning session, then we look to lunch. Um, if it doesn't happen during lunch, then we look to the PM session, right? Ultimately, I just sat on my hands for the Nasdaq until the PM session because I didn't see the rollover the whole time. So once this rollover happens, it's a very, very fast market, especially when it happens in the PM session. So I took it short of this volume imbalance, and then I took it short of this order block. Got taken out of this order block. Why this order block? Because the market was supposed to be a very, 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 very fast market. One of two things happens during a market of this speed. It either just wilts and it drops and it drops and it goes straight for its target. It doesn't retrace at all. It doesn't pass go. It doesn't do anything. Or when it does retrace, it does these really crazy, nasty, nutty whipsaws. So I didn't want to participate in those whipsaws because I couldn't really define risk, especially in the Nasdaq. I was seeing a whole lot of crazy risk. So then I took it short here again, fair value gap, and stop was above this breaker. Okay. Now, why was it above that breaker and not above like an order block or something? Even though by the book we're permitted to get up here, because we're not supposed to get up here. We're supposed to have a very, very fast market, right? So I put the stop here, got taken out there, and from there it really charged up. Now this one was kind of a stupid idea. I honestly don't know why I did that. With I had this weird idea in my head that I was demonstrating something. That I was demonstrating that there was a fair value gap here, so you could short it, I guess. Once this breaker is passed, you don't want to be short in this market. You don't want to be doing anything. As you can see here, took me out. I put my risk here. Now, for this one, why did I put my risk here? Once again, fast market. Not going to be getting up here. Not even going to be getting to this order block, basically. So I picked an order block that was before the 15-minute one. So once that one got taken out, obviously we just drove up and we did what we did. So that showed me that we should have had a very, very fast market. That showed me that we should have been basically parabolic to the upside because we were not interested in those CPI stops at all. We didn't care. If I can get over to show this equities trading that I did. Okay, so Wednesday, this was the split session. This was the first split session that I warned you guys about. So came down, took these lows, right? Took this liquidity. Very, very cool, right? Then we did all this. Probably didn't want to participate in that. Probably didn't want to be interested in that or anything. But we broke up and we did this little OTE type thing. Very cool, very nice, very beautiful into this fair value gap. What is this fair value gap? Well, this is anchored on the hourly chart. Why did I pick this one? Because it was inside the bigger one. That was it. That was the only thought process. I didn't really, I just kind of threw it on the chart, hoped that it was salient, and it turned out to be. So that was really cool. I know you guys were probably expecting me to give some really, really deep, really interesting logic for why I picked this and why it actually did what it did. No, I just thought it was cool in the chart. So So I picked this one. It was inside, and ultimately, it was the one. So lucky guess on my part, actually. So once I saw this capitalized, well, I'm sorry, it's a fair value gap, so it's not capitalized. It's more of an algorithmic signature type thing. Once I saw it dig down, build sentiment this way, I knew that we were going higher, and already had it in my head that we were going higher. I wanted this high. I was not going to be satisfied without a full pull of this high. Um, Thought it was very reasonable. Even to this day, I would defend that. However, if you had no bias, if you were not, well, yeah, if you have no bias, then in the ICT discipline, this is going to be the high, right? So unless you're trading a higher time frame idea, you can't aim for this high because this high already did a whole ton of work, right? But if you're using an intraday idea, you can see that we have this order block here. We have this fair value gap here. We have this giant wick here, massive, right? So that you should reasonably expect that to stop price and aim for this one, right? So I did not do that. I was not interested in doing that. I wanted to do a full pull because I thought that we were going higher in a much faster market than we had, which by all rights, we should have had a very, very fast market in the equities and in the crypto and in crude oil, really, but we didn't. So yeah, so bought it. I do believe I had an order here. Where it just kissed it and ran away. Very mad about that. Not very happy about that. So yeah, once it started running away, this started encroaching on lunchtime ish. 11 o'clock, not a very good time to see very deep retracements, I guess. So we saw this deep retracement. This was during the. No, this was not during anything. So I saw this deep retracement, saw this willingness to go down, this real excitement to see downside, and I just started taking risk off. This was only getting rid of half the position. I still believed in this high, but I wanted to pay myself. And here I just gave up on the idea because it was diddling. It was going into lunch. Didn't want anything to do with that. Okay, so. So here in the Nasdaq, once I saw a price breakdown like this, I thought maybe we're going for these lows. Okay, maybe we're actually doing it. Maybe we're actually doing what we're supposed to be doing in CPI, right? This was during lunchtime. Now, a lunchtime trend is supposed to be very, very fast. It's supposed to not give up a whole ton of ground. It's supposed to just kind of run, right? You're not going to see a lot of retracements. You're not going to see a lot of stalling. You're not going to see a lot of consolidations. You will see rebalancing. So like this, in a lunchtime trend, that's typical. But as you can see, it's still directional. It's still moving, right? Once, come on, there we go. So once I saw that it was doing this, I saw that it was diddling. I just took it off, especially since it could have retraced all of this. I saw it showing more conviction here. Took it short again. Diddling, didn't really like that, took it off, right? And from there, I just didn't participate in NASDAQ. So yeah, that was the Wednesday, yeah. Thursday was a very interesting animal. So I treated Thursday as a kind of a, okay, I treated Wednesday as a seek and destroy, and I treated Thursday as a down day. Although Wednesday was the down day and Thursday was the seek and destroy. So a little bit of a mismatch there. So once we'd gotten down here, I really expected this to support price. Why did I expect this to support price? Because we had a high impact news. It dug into this order block and it left it, and it left it just fine. So the next time that we entered this order block, which I saw us entering this order block here, wasn't really, I wasn't really excited about a lot of what this day was doing until I saw this. Um, Once it did this, I was like, okay, I want to see that the bodies of these candles don't violate the bottom of this order block. So I took this long and I put my stop more or less here. Right? So you can see the long, it's kind of a FOMO long. It's kind of really ugly, but the stop did its job exactly what it was supposed to do. You see that little X? This one right here? That's the stop doing its job. So then my idea completely reversed. I took it short here. Now, why did I take it here and not here? The reason is because if we see whipsaw coming through this order block, well, once we see that these candles come down and they cut through this order block, we want to see the rest of the price action just kind of melt through the order block. We don't want to see a whole lot of whipsaw for two reasons. One, looking at this chart, how do you control risk on this chart right here? You don't really control risk, right? If we go down to the 5 minute, we see the problem gets even worse. How are you going to control risk on this chart? You don't, right? So I didn't want anything to do with that. So yeah, I didn't want anything to do with that. So I wanted to short that. I wanted the flavor of price action where we just melt through the bottom. We didn't get that. So as we started violating things to the upside, I just took it off. Didn't want anything to do with that in NASDAQ. So yeah, that was the Thursday. We can move on to the Friday. The Friday was another interesting day. It was another one where we used keys like this order block. In my mind, I conceptualize that as like keys, and the reason is because how price acts at these levels, it's like a switch, right? It tips their hand, and it tells you whether you should be going long or short. So here, barcoding. We did barcoding, so that's why I saw this fair value gap. We reached up into it and we kissed it. We had already shown willingness to violate this order block, so we were seeing very bearish pressure on the marketplace. So I took this short. Saw no reason not to trust it until the Dixie really started to turn, and I just took it off. So because the Dixie wasn't cooperating with us, didn't like it. That was really it. But the biggest reason that I took it off was because we saw this barcoding. When we see this, this is typically the range stays in here. This is like it running a session range up and down, up and down, up and down. Usually it goes nowhere. Sometimes it drifts one way or the other, but usually it just hurts people. Unless you're good, unless you're some kind of a psychopath who likes trading ranges like this, it's just gonna hurt you. So just stay out of it. I wanted to preserve equity, so I didn't beat this up and down. Even though, really, when I started trading, I started working with ranges, but because they were comfy and they were constant. But that's a trap, right? So we saw lower prices here. So the reason that the comfiness and the consistency of ranges is a trap is because if you have more of an understanding of what's going on a larger scale, it's just better for you basically. So you're going to be able to see the price direction. If you don't see that, they're going to be able to just whip price around and do whatever they want with you, and they're going to basically beat the money out of you like it's candy. So And that really is what happened to me in the early days when I was just trading consolidations. I just got the money beat out of me like candy. So, so yeah, you really don't want to be doing that. So here, FOMO entry, not really a FOMO entry. Um, Sold the volume imbalance. Why did I sell the volume imbalance? Because we were very late in the day. We were expecting a very bearish outlook on the day. So I was expecting it to start dropping. I had no reason to think that it was going to come up here and take out the highs. Why? Because it had already done so here. It had tapped them. Okay. What time did it tap them? It tapped them at 1330. That's a usually very, very significant high. The reason that ICT has us in the marketplace at 1400 is because at 1330 and 1300, it puts in the important highs. So let's see if we can find 1300. Yeah, it digs up at 1300, and then it drops off, and then it digs up at 1330, puts in that high, and that's the one, right? We should have been good to go, right, if we were bearish, but we were not. So then what happened? Saved by the stop. It's here somewhere. High, low, higher, high, breaker, stop loss. There we go. Hold up, let me draw this in the chart. See that breaker? Stop loss right there. This one. Yeah, there we go. Show it. There you go. There you go. Stop loss right there. So the breaker saved my ass. The breaker saved my butt, right? And then after this, it kind of ran up and then ran down and it did all kinds of crazy stuff. Did what I wanted, did what I demanded of it, but whatever, man. Whatever, man. So let's go on the S&P. Let's speed this up a little bit. I know talking about the NASDAQ was very taxing, very hard to follow, I guess. So let's talk about the S&P. So, no. There you go. And yes, we'll be talking about it zoomed in on this 1 minute chart because this is the best one to illustrate the equities trading that occurred in my Twitch account. There we go. Come on, stop dragging things around. I'm trying to speed this up. Okay. And in the future, I'll be editing it. In the future, I will be editing out all of this stuff, all of these extras. But for now, because I'm just starting, I'm just kind of tired. Got a few more things to think about. I won't bother with that. So, the S&P. What happened here? Well, I wanted a piece of the NASDAQ as well as the S&P, but I was able to sell short of this order block a few times, right? We can zoom in, okay? So we saw we took liquidity on Monday, right? Drove up, did this reversal. I was aiming for this order block here. Seemed very, very sensible. Seems like a great idea to do. Didn't happen. Really, yeah, it didn't happen, even though it was very sensible. Saw price driving down. Now, why did I hold the S&P when I didn't hold the NASDAQ? It's because S&P had a lot of downward momentum. The S&P was pressing down, constantly moving to the downside when the NASDAQ was not. So that's why I was holding on to it. You can see I was adjusting positions, putting risk on, taking risk off, putting risk on, taking risk off, putting risk on, until ultimately we saw time of day, 1330, and we did a very strong impulse to the upside. So I just took the trade off right there, and that was it. About this little short, we don't talk about it. Just kidding. We'll talk about this one. Power hour. If you guys haven't heard that idea, power hour is basically the last hour of the day, 1500 to 1600. if no, let's frame this between 1400 to 1600. So between 1400 and 1600, you're on the look for you're on the lookout for another silver bullet. Um, one of those silver bullet one of those silver bullets is going to be during power hour, which is the 1500 to 1600. Um, Typically, it just runs for like 15 minutes, and then it's done. But that's really the basis on which I took this trade. Very, very fast market, very, very quick little hop that happens. Usually it's parabolic, and then, well, and then it's done, basically. So I shorted this volume imbalance, or I tried to short this volume imbalance. It had actually run away from me. I thought it had started, but apparently it didn't. It had other ideas. It wasn't interested in starting until the last 10 minutes, which I was fine with. For a few previous days and for a little bit of time. Okay, so for some time, basically the market has been interested in playing chicken and printing its final move during the after hours immediately as the after hours hits. So I was very comfortable just holding this chopping, and that was fine to me. So then I saw it run, okay, and then I saw it chop some more, and the very end of the day, I just took off the trade. I wasn't really watching the first minute. I'd come back. I think it was like right here, and I made the decision on this candle. I took it off on this one. So why was I comfortable taking it off on this candle and not when we start seeing it just really really run? The answer is because after hours movement. Typically, if you're on side with the after hours, it's either going to consolidate or it's going to run. Um, it's going to do one or the other. It's not going to retrace. It's not going to run against you. It's just going to do that. It's going to consolidate or it's going to run. If it runs against you, then you're offside, probably with the whole daily range. But the, if it runs against you, that means you're offside. So that's more your fault as an analyst. Um, so when you're doing your equities trading, this is not financial advice. This is not trade advice. Take this with a grain of salt. I am not a trade advisor. Um, just keep that in mind. It will either run in your favor or it will chop if you're on side. So because because I knew that I was on side, and I knew that this wasn't going to do a whole lot. I just took this off because nothing was happening. So then we go into CPI. So we can see I took the other side of this trade. Like I was saying with the NASDAQ, CPI does one of two things during a session. It either goes up or it goes down, right? It doesn't really do an in-between. It doesn't do a whole lot of... well, it either goes up or it goes down. So when you see these deep retracements and things, you can buy those. If you have been going up during the session, right? So see 9:30, that's the RTH session. We see that, right? Probably not getting a retracement during RTH. It's probably going to happen during lunch. So that's why I bought this. I was fiddling with the position. I was doing all this stuff. Eventually, I ended up net short. Going into like 10:30. Why I did that, why I did something foolish like that, I can't tell you what was going on. I cannot tell you what was going on in my mind. That's just a bad idea. So here, I was basically banking on the reversal not having happened yet. So took that long. We ended up doing a chop, right, through lunch. Tried to short lunch. Was not able to do that. Took it off. And then here, this was that same bad trade that I did in NASDAQ. So Yeah, no, don't ask me why I did the same trade here that I did in Nasdaq. It was a bad idea. I own up to that. Um, Lapse of judgment on my part, very impulsive. So very detrimental to the account. Bad idea. Did not take it with real money. Anything that I would take with real money. From this point on, I should only really be doing things that I would take with real money because I don't have the luxury of um, drawdown at this point. So gotta control drawdown. Gotta only do things that I would do with real money. So here, Wednesday. First, I took this long. You can see that it was 11 o'clock. One of these highs, just as in Nasdaq, took it off as soon as it showed me that it didn't want to be running for the highs. Right. Took it long again. Took it off again. Right. This wasn't because I didn't believe in this trade. Obviously, you can see that I took an entry here. This was because I wanted to reposition. Because I saw that it was driving. I saw that it was probably driving under here. So I took it off to get a better entry, which I did at the rejection block, right? Next one. So the next set of equities trades that I took on Thursday. So this one, ironically enough, the Seek and Destroy was the most successful day of all of them. No, imagine that. Maybe the consolidation ran up. Maybe my consolidation mind carried. I don't know. I really don't know. So shorted the S&P because I wanted to be short. Took it off here because it wasn't. Did I take it off? Did I de-risk? No, I took it off. Yeah, see? Took it off. Took it off here because it was diddling. We were going into lunch. Didn't want to deal with that. Now, here was a very important note. So, as we were going into lunch, I took this long because I knew that we were probably doing a retracement. And then I took it off practically immediately. Why? Because we were diddling. We weren't doing a whole lot. Now, technically, there's a macro that happens at 12 that makes price shoot off. This is the macro right here. I saw this macro, and obviously I re-entered price. Actually, these two candles I saw in hindsight, because what had happened was I took off the trade, then I went and I made lunch, and I came back, and I already saw that, so I wasn't really able to enter the trade. Did a FOMO entry. FOMO entries are not really great for ICT methodologies. So that's my bad. That's definitely something that I should not have done. It was profitable though, because took it off above the high. You know. So really, doing the most wrong things was the most profitable for me this week. So doing the right thing got me into trouble and resulted in low profits. So do the wrong thing, guys. Don't do the wrong things. The right things are there to control our equity. So here, of course, I shorted this because I wanted to see the fast downside market attack the lows, which were still open from Monday. No, not even from Monday. From Tuesday, those lows were still open from CPI. They're just sitting there taunting the marketplace. Shorted. Took it off once we found out that we weren't very interested in that, right? Once I saw the barcoding, didn't want a single thing to do with this. That was not dealing with this risk, dealing with everything was not really on my plate. I wasn't really interested in that. So let's go and let's go ahead and look at the crypto trades. Now the crypto trades, they kind of suck. I was more calibrating things with these, getting a little bit into the swing of the things with the markets that I was doing. Is this Sunday? Yes, this is Saturday. Okay. So in Ethereum, you can see I was trying to attack these lows. And I wanted to full pull, like attack into these order blocks, into these lows, be like a really cool. I wanted to short this market basically. So I own it. I own up to that. That was a mistake for not taking off the orders when I was supposed to, either at the order block or under the lows. And that was my bad. Hello? There we go. Thank you. Ironically, with Ethereum, my need to sleep and my willingness to walk away from the charts and go flat in order to go to sleep, that saved me in this particular trade. We'll go ahead and show that and detail that really quick. If we can get to it. There we go. So you can see I took a London short. Okay. London short. Took it off. London short. And the reason I took this off here was because I wasn't used to cryptocurrency leverage. Now, in the equities trading that I was doing in the cryptocurrencies, I know. The equities that are cryptocurrencies, right? I wasn't really familiar with the leverage. I was only familiar with what Solana was doing. So when I entered 26 contracts, I had no concept of how much equity that was actually controlling. So basically, I de-risked immediately once I saw what the amount was. So and then I bought because we had taken liquidity, done all that stuff. I didn't really have my finger on the pulse of the market at this point. So that really came on Sunday. So short, pretty blind, pretty stupid, dumb idea. However, during the London, we have all this rolling price action. Now the reason that I actually took this off, it wasn't because I didn't see the market not doing what it was supposed to be doing. In fact, I had more or less evidence that the market was doing what I'd intended for it to do, what I was interested in. So, but what I saw this chop. So I saw this sort of rolling, this diddling price action developing. That's perfectly fine for London trade, for a daily range trade, but no, you don't want to be inside that for if you're just doing a session. So I took it off for this, and my pickiness saved me in that case. So let's go ahead and move over to Solana. More or less the same story. I do believe the first trade that I took in Solana, no. So the second trade that I took in Solana was a thwarted. It was thwarted because I was trying to do a full pull. So let's go in Solana and deal with that. All right, I'm sorry. Let's go into Solana and detail that. Okay. If we could stop lagging. Tuesday. Okay. Saturday, right? When I first started streaming. Funnily enough, I don't actually have these trades recorded because the vods thing, I hadn't figured that out at that point. So it's only the I think it's the Monday. No, it's not even the Monday. It's the Tuesday through Friday trades that you have. I think. Do you have the Tuesday trades? I don't know. But you can see I longed it here. I expected a full pull. I should have taken it off here, ish, more or less. Maybe even here. But I didn't. I was a dick. I was a dick for a tick. So I didn't. Um, so here you can see I was playing with leverage, and I was also being quite stupid. Um, yeah, and then I have no excuse. I have no excuse for that. Here we took liquidity, so I took this as a long off this order block, and saw that the trade wasn't working out, so just took it off. Um, that interestingly enough, that also informed my my which one was it? No, that didn't inform anything. One of these in here actually informed my Ethereum trade, but I'm sorry. One of these in here actually informed my Ethereum trade, but this one did nothing. I just I went in and I saw that it wasn't performing how I wanted it to perform, and then I quit it. So that was what was going on with that. So let's talk about the market structure. So after we're gonna need the hourly chart for this, and we're gonna need to put some opens, and we will need to, after showing off all of this equities trading, we have to take the equities trading off of the charts. Apply to all and say okay. All right, there we go. So we need the opens. So we can see that we really did do a whole lot of reversal profiles on Wednesday. You're going to see as we click through. Um, there's a lot of seek and destroy. There's a lot of reversals going on. It was more or less bedlam. So you can see Solana. We did do a Wednesday reversal. This one was actually a proper down profile, although I wouldn't. You know what? I would call this a down week, and that was to be expected. I think this is the only one that performed as expected, more or less. Um, Once we gave up Tuesday, so yeah, if we look at Bitcoin as well, we can see that seek and destroy type obnoxiousness. This is typically something that we want to keep tabs on. Keep tabs on? No. This is something that we want to keep in the back of our minds. Now, why do we want to do that? Because we're going into a holiday. We're going into holiday price action, very low liquidity, very low interest in the markets. The world is already holding its breath. This is the week open, by the way, so in case you're wondering. I know there's a lot of lines on this chart, but um, see this week open. Actually, that's high drawings. High drawings, high drawings, high drawings. Where hide indicators? No. High drawings. There we go. So we can see the this is our weekly open. But we want to keep that seek and destroy in the back of our minds, because remember, the world is holding its breath right now, and we're going into a holiday. So there's a lot of risk averse behavior that's going to be seen from the market makers in particular, and it's no good. It's really going to affect our equities trading. Just those two things, right? And as a seasonal, we see that, or we saw that we were making highs, so we could either chop or we could do very deep retracements, one or the other. Ethereum is really the only one playing that ball game. We can see in the Dixie, if I turn off these lines, they're very obnoxious for this. That's all right. We can see where the beginning of the week is. Monday was right here. We dug up, we drove down, and we really did a very, very solid down days. This supported higher prices. Didn't see any. Very, very odd, especially with crypto doing what it was doing. Should we look at bonds? We should look at gold at the very least. So let's look at gold if it'll load up. again, going on in the future, I will be editing things like this out. Um, but um, for now, we're just gonna deal with it. Hello, do you exist? You real? How about this one? Do let's see if I can reconnect my internet. Connect. Alma, you're putting up the charts. I know you're doing it. So, come on. Later. Let's not do that. Okay, there we are. All right. So we can see that gold, it really did a mirror reflection of what the dollar did. It also came up to its monthly open, which was very interesting, I guess. We were expecting higher prices in gold anyway, so this is probably the monthly Judas swing, and then this, whatever's going on here. So we should see higher prices in gold, lower prices in dollar. At the same time, we're seeing very confused markets across the asset classes. So yeah, we'll go over that during the review. But for now, um, well, I'm sorry, not during the review, during the top-down prognostication. This is the review. So let's go ahead and look at. So you see this CPI candle. You would be very tempted to say that this is an up week. However, that's not quite true. Even though the weekly open is here, and we did jump up and do all this stuff. That's a trick. That's fake. This week it effectively starts right around here, and as you can see, it's seek and destroy. Now, why does it start around here? Because this basically acts as a gap. The market was picked up, and it was moved from here to here without really affecting its state at all. So that's why I would call this seek and destroy, right? Because this is not really a movement. This is just a picking up of the market and placing it down in a different place. Does that make sense? If that doesn't make sense, that's all right. We'll get you there. So we can see that in all of the bonds. And we can see that in the indices as well. Now the Russell tells us the true direction of the indices. Don't rely on it for day-to-day technical analysis. Don't rely on it for a lot, but it is 2,000 companies and it's very, very difficult to manipulate. Because of that, it can show the true direction of the market. So this is really what I expected out of the indices. I expected them to drop down and maybe do a little retrace once they get this liquidity here. The Russell did that beautifully, and the Russell was really the only one to do that. So there's manipulation, there's breath holding in the market. So basically just be careful going forward. We will outline this further in detail in the stream where I do my top down. But for now, that concludes my equities trading and market review for Friday and for the week of 11/13. Was it 11/13? Was it November 13th? Let me check my calendar. Yeah, November 13th to November 17th. So yeah, thank you. Have a great day, and I'll see you on the stream, hopefully.